Okay, folks, it's Monday the 4th of November. Welcome to this webinar. Hope you've all had a great weekend and taken an opportunity to do all the stuff that you've been ignoring and leaving on the wayside because you've spent 18 hours a day staring at charts for the last year. All right, it's always good to kind of catch up on fixing the garden gate and getting those little errands out of the way. On the calendar this week, it looks like it's going to be a fairly exciting week, huh? We've got no less than policy statements coming out from 3 central banks. That starts overnight with the Reserve Bank of Australia. On Thursday, we have the Bank of England giving us its latest policy decision. And as well, the latest numbers for the asset purchase facility. So that's the QE program here in the UK. We also have on Thursday the ECB, the European Central Bank, giving us its latest policy decision. And that is usually followed about an hour and a half later with a press conference. And that press conference tends to be a fairly volatile event. You tend to get price flying around quite a lot when the euro crosses during that press conference. Always one to watch out for, and it's usually worth having a listen in on that press conference too. If all of that is not enough to get the juices flowing, then on Friday we do have the delayed non-farm payrolls report. So it wasn't released last week because the work hadn't been done and the numbers hadn't been collated because of the prior government shutdown, but it's only a week late, still worth keeping an eye on. And again, all of these events, you can kind of expect the usual kind of volatility that surrounds these events in the marketplace. It's also the first week or the first full week of a new month. Right, so we had November beginning in earnest on Friday, and this is the first full trading week of the month. So at this early stage in the month, it usually helps just to look at the direction that the month is breaking in. Right, it just helps look at the direction that the month is breaking in. We've had a kind of initial break since Friday. But we want to see that break establish itself a little bit, right? So if you're looking at every month, the month is either up or the month is down. And it usually helps, particularly at the beginning of the month, to follow the direction of the month itself. And that tends to be the general kind of strategy that I have in the first full trading week of any given month, which is to say, let's just look at the direction that we're breaking in. And as long as the direction of the month is not changing, then I'm quite happy to hold a particular trade, thinking, the average range in a given month for this particular pair is maybe 300 pips, 400 pips. Or on another pair, it's 250 pips. On some pairs, it can be as much as 500 pips. So if you get that right at the beginning of the month, if you get it right at the beginning of the month and you have the patience to hold that trade for a couple of weeks, just for a couple of weeks, and sometimes it doesn't take much more than that, you could potentially bank the entire monthly range of a particular pair. All right, so it usually helps to mark those monthly open prices. I'm not sure if it's coming out very well on the broadcast screen, but if I drop down to an hourly time frame, you'll see on all of my charts in the background, I've kind of got that monthly level marked off, and it tends to be a key pivotal level for establishing directional bias. And until you have directional bias, it's pretty hard to take a trade, right? So, quite often you have a lot of people saying, I don't have any bias, and You just got to go with the market, and if the market's saying it's up, and if the market's saying it's down, it's down. When it comes to the practicality of trading, you have to have some kind of bias, right? And the issue is really not to become hung up on that bias. You have to be flexible about the bias. You have to allow the bias to change. But if you're going to take a trade, you are having a bias, right? There's no ifs and buts about that. So we're looking here at cable in the first instance. Like I said, I'm only looking at a handful of pairs at the beginning of this month. I've had to sit through 14 or 15 different pairs, and just looking at something I like and where we can build a clear bias and we can build a foundation for trading at this early stage of the month. So we're going to kick off by looking at cable, right? Here's the cable chart, and it's quite interesting breaking this one down, right? So at the top here, coming in around about the 62.50 area, that is your yearly open price on GBP USD, right? So that was the price on the 1st of January of this year. She broke 1,000 pips down from that level, and she's spent the last couple of months coming back up to exactly where she was at the beginning of the year. If you want to imagine what the cable yearly candle is looking like right now, it looks something like this. She didn't really spend very much time above that level, right? It looks something like this. It's pretty much flat on the year, right? But we're just below that yearly level. We're a couple of hundred pips below that yearly level. A key area to be defining sentiment from, right? So you always kind of hear this term. You got to understand the market sentiment. The best way to understand the market sentiment again is by looking at these key pivotal levels, right? And is the year down or is the year up? Is the month down or is the month up? In every time frame, that is enough to tell you what the market sentiment is. Recently, we've been having some very positive data coming out of the UK, right? And even over the weekend, we've had the CBI talking about how they're looking forward to a fantastic fourth quarter here in the UK, and how the recovery is pretty much well underway, right? There's been a lot of positive data kind of driving that. But one of the things which I've been thinking is that it only takes one, as I say, it only takes one rotten apple to spoil the barrel. Just a little bit of bad data would be enough to turn this pair on its head. As it stands, though, between a rock and a hard place, we have the yearly open price, 62.50, acting pretty much as a hard resistance, is the ceiling right now for any northerly moves on this pair. We have support which has been established here. We have support which has been established here at the 59 handle, and she's going and banging on the support. Now, usually when you're able to box a range up at the top and a range at the bottom, it's quite easy to assume that the instrument is going to go into a range. And it's a reasonable assumption too. It's not an unreasonable assumption either. But being a momentum trader, and I say that very cautiously, right? Being a momentum trader, right? I'm more of a pattern trader than a momentum trader, but I like the idea of momentum following through. I always like the idea of momentum following through. So, for example, here when the price was moving up, I'd be thinking, you know what, she's going to move a little bit higher. I'd never be looking for a reversal off of it unless I had another technical reason to do so. So we're talking very much about first principles here. When she was moving down like that, I would be assuming that she's going to follow through to the downside just a little bit further. I would never assume that this is the end, so to speak, of that bearish momentum. Again, when she was moving higher, I'd be happier assuming that she's going to follow through to the upside rather than assuming that she's going to get failure at that level, right? And again, now we've seen a move to the downside. I'm happier assuming that she will carry on to the downside rather than looking blindly for a reversal off of this support level. All right, so very much first principles here on cable. However, all right, and this is a very important caveat. When you're looking for momentum to follow through, you have to have a trigger, or you have to have a technical which validates your analysis and which can invalidate your analysis. So in the near term, looking at cable and looking at the most recent momentum that we've seen develop on this instrument to the downside, I'm kind of saying, you know what, I'd be interested in seeing this momentum follow through. And we have a support which was breached, and that's coming in around about the 60 handle. In fact, we're just above the 60 handle, 60-10, possibly extending up towards the 60-30, 60-40 area. And what I'm saying is that from a technical perspective, as long as the price remains below that block, then I'll be looking for the price to follow through to the downside. I'm not banking on a reversal from this support unless the price is able to break through this cluster of resistance here in the current wave, right? So that block is defining resistance. As long as the price remains below that block, the bearish momentum that we saw develop last month, I would consider that to be intact. As long as it remains below the trend line, I would consider the bearish momentum to be intact. I would only consider a bullish momentum to be developing on a breakthrough that resistance block. And if it breaks through that resistance block, then on a pullback, I would look for that same block to start acting as support. All right, so maybe a flip level there in that block. But what I would not be doing is to be blindly buying at this level. Right? It may suit some people's style of trading. Right? It's not that necessarily it's wrong to do so. It's just not the way that I like to trade. I like to always assume that the momentum is going to follow through. That way, when it does follow through, you end up banking a very reasonable number of pips. And the trouble is always that if you're looking for the reversals, you end up with that mindset. And when you're getting a momentum break, and you start looking for reversals in that momentum break, it can put you in a lot of trouble very, very quickly, right? So it tends to be a safer way of trading. And we're just talking here about an absolutely naked chart. There are times when you have to look for the reversal. They have their own technicals, right? So if you're playing the underside of a wall or a triangle completion or the third retest or the retest of a broken trend line, there are a lot of reasons why you might look for a reversal at a particular place or point. But based upon the current structure that we're seeing on cable, we just want to look for momentum to follow through. And if we find that that level is being invalidated, you know what, she could well end up going into a range between 59 and 62.50. All right, and in that case, the safer option may well be to end up sitting out. All right, so nice lengthy analysis there on cable, which pretty much says, caution, don't do that much. But it's always interesting to look at cable. I think she does have some nice structure here, and not necessarily the easiest interpretation, but you can make a reasonable interpretation just based on what price does from around that 60 handle. You'll also note on this instrument that the monthly open price also came in around about that 60 handle. So we had that last Friday, the 1st of November. I usually take that from midnight UK time. So I have the monthly open price coming in around that level. It is going to be quite a key level for determining the bias, particularly at this early stage of November. Okay, next one up that we want to take a look at again is an interesting one. It's the dollar Swiss. We have, I think, looked at this pretty much every time I've come on FX Street for the last couple of months, and it's only ever been about one particular level on this instrument, and it's always been about this 91.40, 91.50 handle. The reason it's been about this level is that price there represents your yearly opening price. Okay, defines the direction of the year. Now, ordinarily I don't like trading these levels blindly either. It's a kind of general bias that you establish, and then if you can get a technical trigger to be involved in a trade, you would take that trade. I think that there is a technical trigger here to be looking for a short on the dollar Swiss. First off, we have, in fact, if I remove that and draw it, let's have a look. All right, we have a support resistance wall, and she's reacting to the underside of that wall there. You see her reacting quite clearly to the underside of that wall. And in fact, she's kind of just striking that yearly price. What I would say is that, if she's hitting the underside of that wall, or if you like that risk definition, you can go short on this instrument. Just looking for the yearly direction to hold. All right? Just looking for the yearly direction to hold. It doesn't have to cost a heck of a lot. That's at 91.50. Stop at 91.80. It's giving it 30 pips. Not very much. But use the imagination a little bit, right? The yearly range. And the yearly range hasn't been that significant on this pair necessarily this year. She went 500 or 600 pips above it. She's been about 300 pips below it, 250, 300 pips below it. In fact, that is the deepest south that she's been this year, right? So down to the 89 handle, 9 that's about 250 odd pips. Right now, the yearly candle on this pair is looking something like this. That's what it's looking like. There are still a couple of months to go, right? We still have a good 6 or 7 trading weeks to the end of the year. And so this is the level which is going to decide what happens between now and the rest of the year. Below it we're bearish, above it we're bullish. And I still think, and you know what? In fact, I kind of remember being here in January and presenting the same kind of strategic approach to trading the dollar Swiss and trading the euro USD. Just said, look, it's, we're so close to that yearly level. You just have to look at the direction that it breaks in. Our worst case scenario in this particular instance is that she starts doing something like this. Just kind of crisscrossing through that level. But it's worth 1 or 2 attempts, right? If you can take a 30 pip stop looking south, take a 30 pip stop looking north, if she breaks above that level, it's worth 1 or 2 attempts just as a kind of strategic play, looking for the yearly candle on dollar Swiss this year to have an actual body, all right? Just looking for the yearly candle, not to close like this, not to close as a doji, but to close with a body. And you know what? Even if she is going to close as a doji, it doesn't matter, as long as she fluctuates above that price or fluctuates below that price from this level. You have an opportunity to make some pips. What's interesting and one of the other kind of reasons, and I just want to kind of point out that we're not just blindly picking out a number and saying 91.50. And it's not just that, it's the yearly open price, but we've seen this level acting as resistance, and we've seen this level acting as support, right? So it's just interesting that it's the yearly opening price, but it does act as support and it does act as resistance. And in fact, if I mark it as a horizontal level and we go to a higher time frame, you'll kind of see that, right? So we're just going back a little bit this year, and what you're seeing is that it does actually act as support and resistance. It's kind of resistance there, it's support here. All right, it kind of pipped through a little bit, right? Not such a big deal. Pip, perfect support. She spiked down and she bounced off of it. She's come through it a little bit here. That's okay too, but approaching from the underside, you're looking for it to act as resistance. I'm looking for this to act as resistance. It doesn't require that much to find out, right? It's not going to be the largest cost in order to find out. And then if it happens that she ends up breaking through and we start getting support structure above it, right, then I look to buy above that level. It's one of those bias-defining pivotal levels. Whenever price approaches it and you're flat on the year, you have to kind of pay attention. You have to kind of pay attention to that. All right. So like I said, I'm going to look for a short somewhere around here. I'm going to look for the level to hold. I'll look for a tight as entry as possible. And if you want to be a little bit conservative with this, you know what? It's not a problem. Wait for it to start breaking down, right? You've got your monthly there at around about 90.70 area. We've got our quarterly price a little bit below that, 90.40 area. Once the month has started breaking down and the month is turned bearish, you're kind of good to go. You can always mark a lower trend wall and just wait to get a trend line break and let that act as a trigger. But from around this level, it's worth an attempt. And if you're getting the price breaking north of that 91.40, 91.50 area on a pullback, you can look for support in the same block. All right. So, quite a strong rally towards the tail end of last week. All right. But, and ordinarily you're going to be looking for that rally to follow through. But there are some obstacles here. And it wouldn't be unreasonable to look for those obstacles to hold the price. Certainly, if you see the price falling off from that level, that can act as a confirmation that the yearly is holding the dollar Swiss in a bearish direction, or the bearish sentiment is intact as a result of the proximity of price to that yearly level on this instrument. Like I said, if she ends up breaking through it, you get a support structure, you have a good reason to go long using that same level in order to define your risk on that trade. And take a look at pound Swissy. All right, pound Swissy. We have a nice technical trade here on the pound Swissy, and you'll not often see my chart zoomed in this much, but I'm only interested here in what happened last week, where we had that kind of break north on this instrument, and I think we have some structure here, right? So she broke up, she kind of hooked back, made support, and she's bouncing here. So we have a support which has been established here. That is coming in around about the 45.10 area. So it's coming in around there, right? Around about the 45.10 area. And it does extend actually as deep as 44.90. All right, so 44.95. It does extend as deep as that support area. So what I'm doing is I'm kind of looking for this to hold, and I'm quite happy on a pullback towards that 45 handle to go for a long trade on this instrument, looking for a further break to the upside. And in fact, if she kind of does this and does gives 2 or 3 strikes. I always say the first one is giving you support, the second one is giving you confirmation, and the third one is giving you a trade. All right, so there may still be time with this yet. All right, if you see her making that structure, she's building a support structure DNA at that 45 handle, then I'm looking for a break to the upside. If it happens that she's going down to 44.90 and your stop is going to have to be somewhere around that 44.90 area, maybe just a little bit below it. So it's going to require at least a 20-pip stop getting long on this trade. If she ends up breaking down below that, in all likelihood, you're going to end up getting a significant move to the downside. I've been thinking about this, whether I want to play the reversal trade on this. I'm not too keen on the reversal trade, but I'm quite happy to look for the long, looking for the 45 to hold and then continue to break to the upside. As far as targets are concerned, you're talking about 45.70, and then if she's making her way above that high, you're looking for 46, a break for 46. You can start looking for 47. I'm not saying that it's a position trade and that this is going to carry on forever and ever, but I think it gives you a tight intraday technical to get involved in a long on a support on the pound Swissy, and I'm certainly very interested in that trade, looking for the 45 handle to hold and a break to the upside through the 46 on an intraday, intra-week basis for the pound Swissy. So very clean technical on the pound Swissy, certainly worth keeping an eye on from a trading perspective. Just a handful left to discuss now. Right, so there are 3 more charts which we want to take a look at. These are all charts that I'm involved in position trades on already. First up, Euro NZB. So from a couple of weeks ago, we started taking long positions on Euro NZB from around about the 160 handle. This was a trade which rushed about 700 pips into profit. So we had quite a significant move from there up towards those highs, right? That swing from the low to the high is almost 700 odd pips. We started doing some profit taking on that instrument. We're getting a pullback now, and I'm kind of wanting to believe that we have actually a double bottom here, right? It's not a term that you hear me talk about often, right? But I'm wanting to believe that we have a double bottom here. There is a technical reason why there might be a double bottom here. It just looks as though we've got established support on the support wall. So I'm wanting to believe that. And in that vein, I'm looking to kind of get back in on long positions on Euro NZD. So we've done profit taking. We have a small legacy position kind of left over, but we're looking to get involved long again on this instrument. Now, the question really arises, how do we do that, right? And at what point do you start doing that? Initially, what we were thinking about and what we were considering was that we had a support which had been established here, and on Friday, we were kind of thinking, shall we start getting involved at this point? We decided not to. We thought, let's leave it until, it was quite late on Friday when she was hitting that level. We thought, let's just leave it until the market opens on Sunday, and we can make a decision at that point. She's gone and breached that support level, right? It's a little bit concerning, but not too much, right? It's a little bit concerning, but not too much. You do sometimes get these overthrow type of situations where you have a support, the price will breach it, and then it will go back up above that level. So that's what I'm thinking right now on this pair. I'm quite actually happy to go long at market on this pair and just average the stop with the existing position, right? So that will allow me to kind of use 100, 120 pip stop loss, just averaging it with the existing position. So we have an existing position from around here. We go long at market here, and we just average the stop somewhere around there. Okay. There's a technical cause. So if we mark something like this, right? So we've just got resistance, and we've got resistance. and it looks as though this wall wants to hold it, right? So, you can grab H1 bullish off of it. We can grab H4 bullish off of it. It'll kind of give us a little bit of proof that that wall wants to hold, and we can take a long position then at that point. And if this is going to be your first position on Euro NZD, if you have not got that existing position, then you just want to use the wall in order to define bias. If you get the price breaking down below that wall, 30, 40 pips, kill the position. Don't go in heavy. Don't go in heavy. We're not talking about putting all the chips on the table for one spin of the wheel. You want to take a small position. And the reason I'm saying that is that to the upside, we're thinking much, much higher on this instrument, right? We're thinking that she's going to go back to the top of the 60s. Possibly she's going to head into the 70s. That's what we're wanting to think. So there's significant room to the upside. So whatever risk definition you have, however you choose to trade it, just divide that position into 3 or divide it into 4. If she breaks north, then there's going to be plenty of time in order to build a significant position. If she doesn't, the first loss is the best loss, right? It's the one which costs us the least amount of money. So you place a marker, nothing more than a marker, long. And if she starts breaking in that direction, and remember we have a lot of risk data on the calendar this week. You've got the RBA, you've got BOE, we've got the ECB, and we're talking here about trading the Euro and ZD, and then the week pops up with the NFP, right? It's going to require just a little bit of caution. You place a marker. If it starts breaking north, then you look at start adding above the 65 handle, right? Something like that. So a little bit of an aggressive play here at the current market price, just looking for the 63 handle to kind of hold it. We do have a support resistance wall that she's hitting and that she's reacting off of, and we think that wall may hold it. If you want to be a little bit more conservative, wait for a bullish day. All right, so once you've got a bullish daily candle, you know that the bulls are back in charge, and then you can start looking at fading that bullish daily candle. But we are still very much interested in the long plays on this particular instrument, and if it's going to happen, it's got to happen from somewhere around here. If it starts breaking down from here, we'll just sit aside, right? We'll just sit aside and we'll say, okay, let's wait for the move to finish, and then we will reassess the situation once that breakdown is over, once that breakdown's finished doing whatever it was that it wanted to do. All right? So the most recent momentum is to the downside, but on the wider time frame when you're zooming out, there is a bullish trend, and we think that that bullish trend is intact. We have a support base which has been established sub the 60 handle, right? And she broke higher, she's pulling back. We think this is a retracement, and we feel that she is going to be supported around this particular price level. So it's worth starting to look for the long positions on this particular pair. A similar kind of story on AED NZD. Again, we've been looking at building a long position on AED NZD. We've been involved in this from around about the 12 handle. She rallied to the tune of 300, 350 pips. She's pulling back now. We had a resistance block, and you can see I've got that mark on my chart here. This block acted as resistance. Now the price has broken up above it. She's pulling back to that block, and I think that the price is going to be supported here in this block. It could be supported from the top of the block, but what you have to remember is that she could go as deep as the bottom of the block. So that's headed all the way to around about 1330, 1320 area, something like that. And after a while, you stop actually looking at the price and you just start looking at the structure. So that goes as deep as about 1320, right? And So she could go as far as 1320. That's another 130 pips odd to the downside. So if she's going as far as 1320, I think 1320, the bottom of that block, that gives you your best risk-defined entry to get long on AUD and ZD. We're just looking for support resistance flip here. If it does flip at that 1320 level to the upside, we're looking for a retest of the 19 handle. All right? We're looking for a retest of the 19 handle. It's a significant enough target to the upside. You're going to be playing for in the region of about 500 to 600 odd pips. So it does make it worth your while getting involved on this. Now, just a word of caution, and I think I've mentioned this before. We're looking at Euro NZD. We're looking at AUD NZD. We do have calendar risk for both the Euro and the Aussie this week. Something else to bear in mind though. If you're taking Euro NZD and you're taking AUD NZD and there is a sudden change in the risk sentiment on the Kiwi, or if there's a sudden change in the relative strength and weakness of Kiwi itself, then you might find yourself overexposed, right? So, you've got to choose. You're either going to do the Euro NZD or you're going to do the AUD NZD. If you're going to be doing both, then divide your exposure, all right? Divide your exposure between these pairs. You are exposing yourself not just to the Aussie and the Euro, but you're exposing yourself to the Kiwi dollar twice. So just a little kind of word of caution there. Your money management is your own affair, but just think about it a little bit sensibly and make sure that that exposure is divided in case you get a sudden shift in sentiment related to the Kiwi dollar itself. I am looking for further weakness in the Kiwi dollar. That's the kind of thing I'm looking for on Kiwi dollar. But, if that doesn't happen, you could find yourself in trouble very, very quickly. I'm liking what's happening here on AUD NZD a little bit better than what's happening on the Euro NZD. I like this block for a SR flip. On Euro NZD, I'm a little bit disturbed that she's moved through that support structure. Sometimes when that happens, it can be quite significant. It can end up having a significant meaning, right? So a little bit more cautious on that, but I do like AUD/NZD, and I would look for this block to hold the price again. I'm looking at adding to an existing position. It's a position in the management. If I get involved, I'll be averaging my stop. If it's the first position that you're taking on this pair, then make it a small one. It's going to be a marker position. We're looking for a significant move to the upside. And so there will be plenty of opportunity to add once she's moving in the direction that we anticipated that she would move in, right? We don't want to get in too aggressive right at the beginning. Amit, yes, I've already looked at the GBP USD this morning. I haven't looked at the Euro USD. I'll do that for you in a moment. I think we are going to have, we are going to have some time. Okay, last one up, as far as position management is concerned, is the AUD/JPY. We've been looking for a short in AUD/JPY, and I'm just going to remove some of these levels here and maybe get the one that we should be looking at. So let's just clear this. Okay. I have a short bias on AUD/JPY, and I think that this fall that we saw at the beginning of the year, so at the beginning of the year, it's pretty much went. So this started in April, right? So we're talking about the second quarter of the year, and we had that follow through for the first half of the year, and then Since the tail end of August, we had a little bit of stall, and then we've had this bullish rally. I'm looking at that bullish rally as a counter trend rally, and I think that that downward move that we saw on this instrument was establishing a new trend direction, right? So I'm looking for a significant swing reversal on AUD/JPY, and I think I found the level that it's going to happen from. So we have a wall which we've built just using the resistances from the cluster on the left-hand side. A couple of weeks ago, the price pulled up to that level, and what we're seeing is that she just kind of spiked through there. It gave us an opportunity to play some short trades, and she's fallen back below that level. So what I'm thinking is that any rally to that wall, if anything, what it's proven is that there are sellers here. There are sellers there at that wall. And you can see that from even though the wall is breached, right? What that's saying to me is that there are sellers there. And those sellers are saying, you try and come through here, we're going to slap you down, right? And that's pretty much exactly what happened, right? That the buyers went through the level and they got slapped down, and the price fell to the tune of about 250 pips. And the first couple of hundred pips of that move, she did it very, very quickly. Kind of gives you a sense of how strong the sellers are up at that level, up at that wall. So another pullback to that wall, I'm going to look at getting involved in a short trade again. I'm going to look at this instrument breaking down and breaking down further. Say she does not pull back as far as that wall, then I think it comes down to tape reading, right? And I was mentioning at the beginning of this presentation about the beginning of the month. Our monthly price on this instrument is coming in about the 93 handle, right? So if we get a failure sooner than this wall, if we get a failure sooner than that level, and the price just does something like this and collapses, if she collapses down through that 93 handle, it's going to be worth looking at selling the instrument a little bit more, and to the downside, certainly looking towards the 91.50, 91, if not further. All right, so I think we are at a significant swing level. It's going to be a significant turning point in AUD/JPY. Certainly, if the wall holds it, it would not be unreasonable to be looking for a retest of those lows at 86, 87. All right, so what are we talking? We're talking 800 on pips. I know it sounds a little bit crazy, but no reason why not to. No reason why not to. And certainly if it goes and rushes into the money, I think that is something that we can start trailing at that point. So in the near term, it's about the wall. If the price ends up breaking above the wall, leave it alone. Okay? But as long as the wall is holding, and as long as the price is able to stay below that wall, technically the bearish sentiment will remain intact, and then there is no reason not to look lower, right? And no reason not to think that we may be onto something bigger here, right? And that is my consideration with this instrument at this particular moment in time. We have looked at this a couple of times in the past, and one of the other kind of confluencing factors was that we had over here on the left-hand side. I'll show you this. We had over here a support structure. So once the price is broken down below it, you would expect to find resistance inside of that structure. There's some confluencing factors here, right? It's not just kind of on its own. We've got a trend wall, we've got support turning resistance, the price has been rejected from that trend wall, and so we're kind of thinking, if that block is holding, if that trend wall is holding, then it's reasonable to be looking to the downside on this particular pair. So that's me done. Those are the charts that I'm looking at this week. Amit is asking about the Euro USD. So I haven't looked at Euro USD, but I'll tell you what's going on with it, which is that last week we have a resistance wall. Okay, and so there's our resistance wall. Okay, and that's the resistance which I'm looking at there. Okay, and then we've taken the highs, create the buffer in a sense. We have a resistance wall, right? If you want to know where the sellers are, they are here against this wall. That's where the sellers are on this instrument. We've had bearish momentum last week. We had very, very significant bearish momentum last week. All right, and not only do we have that bearish momentum, but we also able to take the opportunity to get involved in short trades. So there were some quite sweet trades on Euro USD last week. What we're thinking right now, again, is just about applying the same principles which I mentioned at the beginning of this presentation, right? So I'm looking at this and I'm kind of thinking, you know what? We had fairly strong momentum to the downside. I want to know a couple of things, right? First off, because we've got momentum to the downside, where's resistance? So I'm looking at a support block here. I'm looking at this as a support block there. So if that's been a support block and the price pulled back to that level, it would not be unusual for that block to turn resistance. Right, so I'm saying, okay, that's where the resistance is on this particular pair. It would require quite a significant pullback to get you into that short, and we have an established support here. Right? Okay, so you can see she's a little bit between a rock and a hard place. The resistance is quite far away. There is a support level here. And, you don't necessarily want to be buying because it would mean fighting that downward momentum. And you don't necessarily want to be selling because you can't get risk definition when the resistance is that far away. All right. Euro USD, what I would say is, if anything, from a price expectation point of view, I would look for the momentum to follow through to the downside. Okay? But from a practical point of view, I can't see where I'm going to initiate a short trade from. Okay? Now, you might say, but Will, you just said there's a resistance block up there. Right? And so, if the price pulls back to that block, wouldn't you go short? At that point, I would just be thinking, you know what, she's just rallied 150, 160 odd pips. All right? You see the kind of conundrum, right? We're not really near a significant level. We don't have we can have a point of view which just looks at the momentum following through, but the practicality of trading this right now, I think it's a tough call. I think it's a hard call. And it's probably the reason why I didn't look at it this morning. Right? That's probably the reason I didn't look at it this morning. I've delivered analysis on Euro USD every week for the last 3, 4, 5 weeks. And I don't tend to look at it that often. But over the course of the last few weeks, it was a very straightforward analysis to deliver. Right? So, 2 or 3 weeks ago, the price of the instrument was here on Monday morning, and what I said was that, you know what, we've got resistance is turning support. From a technical point of view, as long as the price does not break below this 34.30 area, then you got to be looking for more upside on the instrument. All right, that was the analysis that was presented. Last week, the analysis that was presented was that we have support which has been established around that 37.30 area, right? And the price was here somewhere. And what we said is that as long as 37.30 is intact, you got to look for upside. If that price breaks, then you look for the downside on the instrument. So it's a SR flip area, right? Right now, based upon the current price structure, we don't actually have a heck of a lot to go on just yet. I think we need to wait for more structure to develop. If it was a question of general sentiment, then I would look for the momentum to follow through to the downside. But a practical trading aspect, I think it's a difficult call right now. If you wanted to, you could buy that area, saying, look, it's an established support. But I dislike the idea of doing something like that blindly. I think you would need a secondary criteria to act as confirmation. Normally, I like to use something like a trend line, but this move has been so sharp, I don't think that it's worth using a trend line. It's just been a very, very sharp move. That trend line break may not be as significant as ordinarily you would judge a trend line break to be. All right, it may not be as significant as that. So some caution here on Euro USD. I think it's just a general point of view on the sentiment itself more than anything else. Okay, folks, if there aren't any further questions or any other charts that you want looking at, I think we are approaching the end of this presentation. Thank you guys all for attending this morning and taking the time out to do that. I'll be back here in about 2 weeks' time. Thanks as well to the team at FX Street for providing the platform. If you like what you've heard and you would like to receive my trade notes every week, then you are welcome to check out my website and you can subscribe to the various services from there. Thanks again, one and all, and I will see you the next time.